renewable energy is going to be a hot topic in the next 5 to 10 years. As countries and governments slowly invest more money and go towards clean and renewable energy to battle climate change and global warming, it's no doubt that this sector one day will be booming. So it'll be a very smart idea and a good idea to invest today. It's projected that by the year of 2050, 38% of all electricity generated is going to be coming from renewables. But honestly guys, in my opinion, I think it's going to be a lot sooner than that. Those of you guys that follow me, you guys already know how much of a bull I am in the renewable and clean energy space. I mean, I really can't see why this will not work out. In this video, I expose you 2 Canadian renewable energy stocks that you guys can buy right now and probably hold forever because they are such gems and amazing companies to hold, and their intentions is exactly nothing but renewables. Welcome to Nature Boy Fitness, or the Pidgey channel. In this channel, we talk about nutrition, calories, fitness, and investments. I love these topics a lot and I have a lot of experience in them, so I do love to give a lot of tips and tricks and advice. So if you guys are interested in these categories and in these topics, hit the subscribe button and the notification bell so you guys will not miss another video. Please note guys that I am not a financial advisor. I'm just a guy on YouTube that talks about calories and nutrition and fitness. And so take everything with a grain of salt, do your due diligence, and always do your research before getting yourself into a stock. Alright, let's put on my investment glasses and let's begin. The first renewable energy company that we have here is one that I've already talked before in my previous investment video, and this one is called Northland Power, or ticker symbol NPI.TO. This is one of my favorite companies to hold because their fundamentals are right and everything about the company is moving to the right direction. You will see yourself in the video and you will see why this company is such a solid company to invest in. The last time we spoke about this stock, the price was $36.07. Now, the stock is trading around $35.66. About 3 weeks ago, Northland Power was about to hit an all-time high of $38. But recently, we've been having a little bit of a sell-off, which is normal and healthy, putting the price to $35.66. But honestly, guys, this is such a strong and powerful company that even if the share price was $40 per share, it's quite worth it. Because in the next 5 to 10 years, you will not get these prices again. But let's go ahead and take a look in this company and see why they're so strong and well positioned for the future. So the company operates not only in North America, but also has assets in South America, Europe, Asia, and continuing to grow. So they are well diversified, which is good. But let's go ahead and take a look at their financials in Q2 2020. But please take a note that Q2 2020, I mean, for mostly all businesses that were in tech, really got hit by the shutdowns, the lockdowns, and the restrictions. So let's take a look, see how Northland did in quarter 2020. So if we go ahead and take a look at the chart here, quarter 2 2020, their revenue was about $429 million with earnings or net profit of $55 million, which seems to be in the normal range if we look at quarter 3 and quarter 4 2019. Let's take a revenue from 2016 to 2019 year over year, and if we do the calculation and do how much they've been growing on a annual basis, it's about 15%. But the net earnings, or the just regular net profits, from 2016 to 2019, they've been growing 40% year over year, which is insane. And the predictions that there are for the trailing 12 months, 2020 revenue is going to be, or predicted to be, 1.9 billion, which is about 15% increase from 2019. And the net profit or the earnings is going to be, or predicted to be, 377 million, which is about an 18% increase from 2020 as well. If Northland Power can deliver these numbers by end of this year, I mean, that's amazing because quarter 2 was just terrible. It was just a brutal quarter for everybody, and if they can beat 2019 by these numbers, that's very impressive. If we go ahead and take a look at the earnings per share, that was also beaten by 4 cents. Analysts were saying 22 cents, but they did 26 cents, which was amazing. I mean, they've been beating, if we just take a look at the chart, they've been beating it for every quarter, and they're going to continue to do this because they're just an amazing company. Now let's go see how healthy they are by taking a look at their balance sheet. By looking at their recent balance sheet, Q2 of 2020, the current assets were just over $1 billion, but the current liabilities was almost 1.3 billion. And if we go ahead and divide that, we get a ratio of 0.8. But let's take a step back and see why there was a big dip in their assets. Upon doing some research, it seems like they were paying off some debt and buying more assets and land to do more of these renewable things, which is good to see. So it seems that Northland won't be able to pay off their current liabilities this quarter, but that's not much of a concern because utility companies usually have their current liabilities higher than their current assets, and that's because the profit that they generate covers that current liabilities. So it's not that much of a concern to me, and it shouldn't be much of a concern to you as well. But personally for me, I like to see the current assets more than the current liabilities. It's more of a insurance purposes to me. But let's go see their long-term debt and see how that's going on. Their total assets is about 11.4 billion and their total liabilities is almost 9.5 billion. So if we divide that, we get 1.21, which is good because their total assets can pay off their total liabilities. Now the current assets and current liabilities is not much of a concern when it comes to utility companies, but the total assets and total liabilities are much of a concern. So as long as that number and that ratio is increasing, there's not much of a concern. And we can see that reflect in the shareholder equity, and if that continues to grow, which it is here, it's awesome to see. Now let's go ahead and take a look at their cash flow and see how that's going on. Their cash flow is increasing quarter by quarter, which is nice to see, and cash flow is everything when it comes to company. So it's nice to see that Northland is sustaining it and actually increasing it over time as well. Overall, the financials to me look positive, even with quarter two being a very brutal year. But is the price of $35.66 a good time to buy? Is it a good price to buy? Well, let's go take a look and see if it is or not. If we look at the PE ratio, it's saying that it's 18.76, indicating that the price is a fair price to buy. But if we go ahead and look at the chart, we can see that it has a very healthy movement to the upside, and it's these types of companies that will keep on growing. But since we are facing a lot of volatility lately, you could probably get in at a cheaper price. But honestly guys, the fundamentals of this company is on point. So even if you buy now, in the next 3 to 5 years, as I mentioned before in this video, these prices are going to be a bargain, and you would only wish that you bought them today. So don't let a couple dollars or a couple cents scare you from not investing. Not to mention here that Northland also here gives a 3.37 dividends, and they tend to increase that every year. So what else do you want from a stock? Sustainable dividends, I mean high growth, I mean the future is bright. It's honestly one of the best stocks you can probably buy today. Overall, I love this company, and I do own quite a bit of shares of this company, and if there's any dip like recently, I tend to buy more of it because the fundamentals don't change and they just keep on growing and going. And since the green energy and the renewable energy business is looking very bright, it's in its favor at the moment because governments are changing to that sector, Northland is going to be a key player in this field. But you may say that $35 per share is quite expensive for me. No worries, the second renewable energy stock that we're going to be talking about, the price is half of that, and it's also one of the key players as well. The ticker symbol for the second company is LIKE, and this company is going to ask you to like this video if you're enjoying so far. But no, seriously guys, if you guys are enjoying this video, please hit that like button because these videos do take a while to make, and I really do love making them for you. So if you guys do enjoy this type of content, please hit that like button so I know that you guys do love them. Alright, now let's actually get back to the video and let's talk about the second stock. The second renewable energy stock is called Algonquin Power and Utilities. Ticker symbol AQN.TO for the Canadian market and for AQN for New York Exchange. Algonquin Power and Utilities is aggressively moving towards renewable energy and sustainable energy. And honestly guys, this was my first ever stock that I bought when I started investing 7 years ago, and yet it still has not disappointed me at all. It's actually the longest held company in my portfolio. I just love them so much and I buy at every dip. And you'll see why this company is so great. So let's go ahead and dive into the investor presentation and see what kind of goals they got, and pretty much overall let's see what they have for us. So it looks like they got 4 goals here, and the first goal is to reduce fossil energy, which is fantastic. I really don't like fossil fuels, to be honest. If we look here below, they want to increase 2,000 megawatts, which is about 2 gigawatts of new renewable generation capacity by 2023. And note this, because we will come back to this in just a bit. The second is clean and affordable energy, which is amazing because that's what we all are here for. Third is clean water and sanitation, as well as sustainable cities and communities, which they aim to be 100% renewables. Getting the energy from 100% renewables, which is just freaking amazing. I love it. I love it. So as we can see here by their goals, this company is screaming nothing but green. But let's keep going. If we take a look at this chart, about 35% of all its energy is coming from renewables. But this is where it gets interesting. Right now, they are generating about 2.2 gigawatts of power through renewable energy. But let's go back to that first slide. Here they're saying they're planning to have another 2 gigawatts of power coming from renewables by 2023. So that's less than 3 years. That means Algonquin will have more than 4 gigawatts of power coming from just renewables by 2023, which is absolutely insane and aggressive, which is why I love this company so much, and one company that I will continue to buy and hold forever. So that's what we're going to cover here about the background of the company. If you guys want to learn more about it, just head on over to the website and go to their investor relations, and you will see exactly what they're doing. But right now, let's move on to the financials. Let's go ahead and take a look at their income statement chart of Q2 2020, and let's see how they did. In Q2 2020, they did a revenue of 343 million, but earnings of 286 million, which is really good because they made up the net profit loss in Q1 2020. In fact, although they have a negative return in Q1 2020, the net profit in Q2 2020 alone is more than their 2016s, 2017s, and 2018s, even if you subtract the Q1 2020 net profit loss. It's crazy because the fact that they had a positive and a high profit of Q2 2020, despite the restrictions, the lockdowns, the shutdowns, they still pulled in quite a bit. As well as if we go ahead and add the revenue of Q1 and Q2 2020, we get just over $800 million, which if they continue this kind of revenue, which I believe they will, 2020 will be a record year. Alright, so let's go ahead and take a look at their recent balance sheet. Their current asset was about 466 million, while their current liabilities was just about 750 million, putting the ratio to 0.6. Again, as with all utility companies, their current assets are a lot less than current liabilities because of their high return or high earnings every quarter. So it's not much of a concern. But for this particular stock, if we take a look at their quarter by quarter balance sheet as well as their year over year, their current assets have always been less than current liabilities, so it's not that big of a concern here. Now let's go ahead and take a look at their long-term debt. Their total assets is about 1.1 billion, and their total liabilities almost 6.7 billion. So if we divide that, we get 1.68, which is really good in my opinion. And if we go ahead and take a look at their quarter by quarter and as well as year over year, their total assets and liabilities, it seems like the total liabilities, they're trying to reduce as much as possible, but the total assets are growing, which is amazing to see. And honestly, that's what I prefer to see in any stock, not just Algonquin, but in any stock. They have to decrease their current liabilities, total liabilities, as well as increase the total assets. This way, it increases their shareholder equity, meaning that the company is worth more and they value a lot more. Speaking of shareholder equity, let's go see how that's going on. As we can see here, it's increasing quarter by quarter and year over year, which is really good to see. All right, lastly, let's go ahead and take a look at their cash flow, because cash flow is always important in business. As we see here in the cash flow, there has been some negative for some time due to purchasing of other assets like land and other businesses, which we can see here in the capital expenditure. But now it seems to be going positive, so that's very good. Now that we went over the financial, let's see if the price is a good buy. Right now, the stock price is $18.36, and if we look at the chart, they are down almost 20% from its all-time high back in early March. So you could say that they are on a discount. Their PE ratio is 19.14, which indicates it's a fair price to buy. But if you ask me, it's more than a fair price to buy, because in the next 3 years, this is a growth stock, by the way. In the next 3 years, you will be begging or asking or wishing that you guys bought at this price. So in my opinion, this is more of a good price, and we have a 20% discount. Algonquin also provides dividends of 4.52%, and what I love about this company is the fact they keep increasing their dividends year over year, and they even increased it this year with the pandemic, with all this mayhem. So that is why I love this company. In fact, the dividends have been increasing 10% since 2009, which is just fantastic. Another great thing about Algonquin dividends is the fact that it gets paid through US dollar. So if you're a Canadian like I am, when that dividend gets converted, you get that sweet conversion rate from US dollar to Canadian. So that's a plus as well, a big plus. And overall, if we just take a look at the max chart here, Algonquin has a very nice upside, nice and gradual, which is something that I look for when I invest. Algonquin is one of my favorite companies or favorite stocks in my portfolio, and a wonderful dividend payer, hands down. And this is one company that I will continue to buy on dips like it just happened in March, that dip that happened, that crazy dip, you already know I loaded up there. But this is one of the stocks that I will continue to buy and hold for the rest of my life because they are such a wonderful company. Overall guys, Northland Power and Algonquin Power and Utilities are great companies to invest now for the next 5, 10, 15, 20 years because you're going to see the impact of renewables really kick in the next 5 to 10 years, especially when governments are now putting more money towards renewables, clean energy, and it's happening right now. So if you guys are really interested in investing in renewables, please take a look at these two stocks. Do your own due diligence, but I don't think you'll be disappointed in the future. If you guys believe that Northland Power and Algonquin Power and Utilities are a great stock to buy for the next 5, 10, 15 years, hit the like button. Comment down below if you guys have any questions or concern. I'll be more than happy to get back to you. And subscribe for more. And guys, I wish you guys the best. Good luck with your investing, and I'll see you guys in the next video. Peace.